Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. Well, it is Wednesday, and the market bounced a little bit, but I don't think we should get too excited here because we are, I think, going to be going lower in the market. But who knows? You never know on that. But, that's kind of what it's looking like to me. Basically, the markets are moving a little bit higher. There is sort of a dead cat bounce going on here, but I'm not so convinced that we're going to see what we need to see in the market. That's just my my take on it. I think we're going to see more of the same. I think we're going to continue to move lower. So before we do anything else, let's get into some interesting stuff here. One of the things is I want to show you this chart, very interesting chart. I don't know if you can see it. Hopefully you can. I'm trying to broadcast my desktop to everybody on TikTok. So hopefully you can see this. Let's see if I can do that. That's probably better. Well, let's see if we can. There we go. Okay, so I think you can probably see that. So anyways, hopefully you can see this chart. And it's a very interesting chart in that it starts over here in about 1966, okay? That's sort of the last time we had a similar, I think, potential action on the market that we have now. In 66, the market took a dive, and the people that didn't sell there and hung on, basically they went down and then it bounced up and then it moved up again. But by 1968, it was down again, and then it was up again. Now, between 1971, 1970, really 1975, this was the period when we went off the gold standard. And as you can see, if you didn't sell and take that loss quickly, a lot of stuff never came back. As a matter of fact, by 1976, this is when Jimmy Carter was president. I remember it very, very vividly because I was, believe it or not, still in high school at that time. And lots of inflation, things were, went up quite a bit. But the stock market, it really never recovered. It even up until 1980, and this is when Ronald Reagan came in, it still had just come up to where it was back in 1966. This is why the 7% rule is so important. It's so important that you look at possibly selling, getting out of the market. Now, I know that Kramer is saying to everybody, stay in the market, but I am not a big proponent of it because remember, Kramer was the guy that was telling you to buy Lehman stock basically a week before it went bankrupt. So here's the thing. If you're down more than 7% on the stock, please sell it because I think that, we're in for some heavy weather. Now, there are opportunities. There are going to be opportunities to make money. But right now, if you do have some, right now, cash is king. So basically what happened is this is when Ronald Reagan came in. And basically from here to here, it took 2 years. I remember this really, really well because I was in college. From here to here, basically we had over 12% interest rates. It was very, very tough. We had over 12%. We had over 12% interest rates in this period. And what happened was eventually the high interest rates broke the back of inflation, and then the market just took off like through the moon. Okay, basically at about 1973. But we're probably in a period like this right now where we're probably going to go decline. Now, I'm not wishing this, believe me, I don't want this to happen, but we're likely to see a decline for some time if the interest rates continue to go up like they are. I want to show you this chart because this is an interesting chart, and I think I'm going to move it right over here basically what's happening in the U.S. market, if you were just in equities, in the U.S. equities, in the first quarter, you lost about 5%. If you were in quote-unquote value investing, this would be kind of like the Warren Buffett stocks. You made a little bit. I really question this one, though. Growth stocks, and of course, this is where the NASDAQ was. It dropped basically 11%, which is quite significant. And if you look at the developing markets, there's no hiding there. It was down 5%. Now, interestingly enough, there were two areas in the market in the first quarter that did pretty well. One of them, of course, was energy. And of course, that was the place to be, was the energy stocks, the oil and gas stocks. That's why I've been trying to tout these stocks really for the last few months, because this is where the market is telling us that the best part of the market is. Utilities also up a little bit, but just barely getting by. Now, if you look at the rest of the market, I'm going to kind of pan over here with the with my camera here. Basically, the bond funds were down, the treasury funds were down, high yield was down, everything was down. So actually, believe it or not, one of your best investments in the last quarter or so would either been into oil and gas stocks or cash. Kind of amazing. So now everybody has been touting Bitcoin as really kind of being an alternative, to, as an inflation hedge. But here's the results that I'm coming up with. 40% of Bitcoin investors currently are underwater. That's terrible. Bitcoin is off nearly 55% from its November peak, and 40% of the holders are now underwater. This is according to Bloomberg. Also, in the last month alone, 15.5% of all the Bitcoin wallets fell into an unrealized loss. So basically, as Bitcoin drops below that key, that key $3,100 level, that's kind of where we're seeing, we're seeing problems. So the question is, you can ask me, well, Jim, isn't there anywhere to hide? Well, there is, but it is basically, and this is hard to believe because everyone's talking about how bad cash is, but right now, one of the best places in the market is cash. And what I'm doing right now is I'm linking. You'll see this in a second. Here we go. And this is, it's taking a bit of a time. There we go. Cash. What I'm doing right now is I'm linking. Well, I think that's not going to work, so I'm going to have to close that tab. So, anyways, what's happening? The key takeaway here is that Bitcoin is not. It's not an inflation hedge. Okay, everybody was touting it as an inflation hedge, but it's down. So, Bitcoin, I repeat, is not an inflation hedge. What people are doing is they're selling their Bitcoin to get dollars to pay things because they have to pay in dollars. So, believe it or not, right now, one of the best places to be is either short the market or or in cash. So currently, right now, here are my holdings long. Currently, I only have one stock. Can you believe that? I got stopped out of the XLE today, and I sold the SQQQ this morning. And so the only thing I'm in currently, and it's up, not very much, but it is up, is Chevron, which is obviously an oil and gas stock. So very, very interesting times that we live in right now. In that, very interesting times that we live in terms of everything. So really, that's kind of what I have to say. Here's the situation that I have on my shorts. Now, my shorts have been doing fairly well. Now, they did pull back a little bit today, but I have shorts on. These are bear put spreads, and basically my risk is $500 or less on each one of these trades. Boeing, I'm short. I'm with a put short there. Salesforce, Disney, Netflix, and the QQQ. So I'm short on all of those. Now, currently, as of the close today, I was up $399 on the Boeing spread, $59 on the Salesforce spread, Disney up about 370. They're going to be reporting earnings tomorrow, so I may close this one early. But I was down a little bit on Netflix. But at the end of the close, I did this right before the close. It actually Netflix went down, so this will be probably turning green tomorrow. On the QQQs, the same thing. So basically, what we have going on here is we have a situation where the best things to be in currently are cash or short. So I want to kind of show you some of these trades that I have currently on right now. This is the current value of the bear put spread on Boeing that I have. Currently, it's worth about $399. As Boeing moves lower, it's going to move higher. As you can see, as it's moving down. So if we take a look at the chart on Boeing, which is symbol BA, you can see a little bit of this. So let me switch over to the chart here on that. See if I can share that with everyone. I'm trying something new on TikTok, and that is I'm trying to take a picture of my screen. So I don't know how successful that's going to be, but anyways, that's what I'm trying to accomplish with TikTok. But anyways, here's the chart for Boeing. Boeing did decline once again at 132.80. So the chart that we have, and this one's starting to work. It's 132.95 is where it closed, and then it's now at 132.80 after hours. So probably I'm going to keep this one because it looks as if it's picking up steam and it's going to move lower. Also, I'm in Salesforce. Now that did move up today, kind of a dead cat bounce on that one. That's symbol CRM, and CRM is basically there we go, Salesforce. Salesforce did move up today, but because it's so volatile, the overall trend for Salesforce is down, as you can see. So hopefully, if we hold on to this one, it doesn't move up too much. We will start as we get closer to the expiration over here. We will start to see it move. Now, here's the reason why bear put spreads in a down market work so well. Most of what we're gaining here is basically time decay. Okay, so what's happening is we're holding these puts with a spread, and then they are basically they're basically. Let me see if I can. I'm drinking coffee. Thank you, and watching your live show. Okay, fantastic. Thanks. I was just talking to the people on the Discord room there. Thank you very, very much for watching. So the reason why these bears trades work so well in a downtrending market is because as it gets closer to the expiration of that contract, that's what they call theta decay. And theta decay happens regardless. I mean, time goes on. So basically what we're doing is that there's less and less time for this to come up and move up, so that as that happens, we get the theta decay. And that's really how you're making money with the bear put spread. You're making money because it's going down or staying down, and the theta decay is what actually adds the value to the contract. So that's why I like these bear put spreads so much, because we're working with something called theta decay. Now, here's another one. I started this one a little bit of time ago. You see, we've been in this one a while, as you can see. We started it way back here on the 26th of April, and of course it's May. It's May 10th now, so we've had a fair amount of time there. As you can see, as even though Disney went up today, because of this theta decay, the value of this trade actually became more, and this is the theta decay that's working with us. So that's one of the reasons why in a market like this, I tend to really like to see. I really like to use these trades that favor this heavy theta decay. Now, another way you can do this, of course, is with a covered call, but by doing a put spread, you're risking less money on the trade, and that's why I like them so much, because I'm trying to do this and show everybody. I'm risking basically $500 on each one to get sometimes a 2 and 3%, a two times or a 3 times percent fold gain. Either 100% gain or more. Now, the reason it works so well, of course, is as the stock moves down, the value of that put, that's the upper put, becomes much more valuable. And once the trade has moved below the value of that lower put, then basically you're just waiting it out, waiting for time, and the time is what basically adds the money there. And this is the case here. Back on the 25th of April, that's where we started this put spread. Now, nothing really significant has happened. It's just gone down, and then it rallied to the 10-day line, and then it's gone down. Now, I see this happening in a lot of stocks. So there's a lot of potential profit that we can milk out of these trades. Now, I didn't even enter this one properly. I probably should have entered it here, where it went up to the 21-day line. I'm going to be trying to tighten it up a little bit on my entries here, but basically, this trade makes money as the stock goes down, and the reason I like these trades rather than just having the puts themselves is I limit my exposure. My exposure is limited in this case on the Disney trade to $330. Okay, $330. That's the maximum I can lose, and that's if and what happens at $330 is if it goes above 115 and stays above 115, I basically lose all of the money that I put into it. So that's my maximum loss. But if you look at this, it's almost a it's actually a little bit more than 100% return here, potentially. See, 203% return, because I can potentially make $670. Now, of course, this has to go and stay below the 110, and definitely it is. This is the line right here. You can see where it's all in green here. So this is basically your 110 line. And as long as it stays below there, we'll make all the money. So this is why I'm pretty much gone to cash, and I'm trying to get to a place where we're going to be, hopefully doing more of these, so that we can make money in this market. Even though I don't really recommend being long right now, just because the market just seems not to be working. Now, sometimes you get it a little bit wrong. This is the case with Netflix. Today, it was up $4.56. Now, we entered this trade basically yesterday, and it pulled right back up to the line. Now, hopefully, we will see Netflix move lower, and I definitely think we will, because let's take a look at the chart here. And let's move it over there. Hold on a second. Hopefully, we'll get down that chart. All right, this is the chart here. You'll notice, and this is one of the things that we want to be looking for in a potential shorting candidate. This line here is the 50-day moving average, okay? You notice how this is not pointing up anymore, it's pointing down. Well, what this means is that people are trying to sell this stock. Now, when I came into this stock, okay, I was right about the 10-day line. Now, it bounced up, but I do believe we're very, very likely for it to get to a move down. And why do I think that? Well, this 200-day line is moving downwards, and that means people are moving out of the stock. What's happening here is that many of the big funds that are in the stock, there we go, many of the big funds that are in the stock, and there's a lot of them. Let's go to the ownership here. See, there's 3,282 funds that are in Netflix, and a lot of these companies are going to have to get out, and they're not going to be able to. So what they're going to try to do is they're going to be buying puts to hedge themselves, and that's why dealing in puts, at least for now, in this kind of market, probably will be a good strategy. Hopefully, it will. Also, I did, this is a modified, Gavin McMaster of IBD put this trade together. We are down a little bit on this one today because it did go up. This is the QQQ. We started here, and then you can see we're in the red zone, but we still have quite a bit of time, And of course, we can adjust this one. Let's see kind of where the Qs ended up. Ended up today. Let's see. I think it may have gone down a little bit below. It's still at 300. Okay, no, it's pretty much 375. So it's down a little bit, but not a lot. So basically, this, if this continues to move lower, and basically all this has to do is move below 290. So that's not very much. That's basically that's basically 10 points. As long as it moves down about 10 points and holds that, that will be where we will make all the money. Now, see, if you notice, this is not very much of a decline in terms of a decline. So about a 4% decline over 30 days, and we will make money on this one. So those are kind of the ones I want to show you there. I will have, obviously, I'm looking to put out some more of these trades as well. So if you're not already on the trade alerts, no problem. Just go to www.Dallas Trading Floor to get onto those. All right. Well, thanks for holding on, and let's start getting into some of the questions here. Thank you for being so patient. SBOL did it again. Yeah, 25% one day. Fantastic. Yeah, a lot of these leveraged funds are going to do well. And if you're willing to day trade, this could be a good answer for you. I'm personally more inclined to be a little bit more careful here, just because of that. But this is a very volatile stock. It's there's a lot of volume, and it's moved up. So definitely a good thing. The thing about this one, though, is that in this market, we are in a downward trending market. So you do have to be a little bit careful. But, it's not a bad idea to buy it off of that 21-day line. So congratulations. That's a good trade. That's a very, very good trade. Fuel prices keep rising. Do you think the market... I don't think the market has ever done good. It's not going to do well, unfortunately. It's funny you mentioned that, because last night I was driving home, and I went, and Dallas usually has some of the cheapest prices for gasoline in the United States, seriously. And I paid $6 and I'm sorry, I didn't pay that much. I paid $4.16 for gas. And I don't have a huge car, but it was about $65 to fill the car. This is going to absolutely wreck a lot of people's economy. It's going to be very, very tough on them. And I don't even know if the oil companies will make money either, because typically when this happens, and I lived through the Carter administration, and the Democrats were in control then too, and what they did is they did everything they possibly could to basically monkey the system. They did odd even rationing and all that stuff. And basically all it did is kept the prices high. They didn't allow for new drilling, and that's the problem. You see, we really sealed our fate, unfortunately. Well, the first thing, of course, that Biden did was cancel the XL pipeline. Well, that Keystone pipeline, well, you know what? That would have kept the prices down. But, once they got going, they're going to continue to go up. And I could definitely see, by summer, $5.56 gases, even in Texas, and probably $8 or $9 gas in California. So it's going to be tough. A lot of people just aren't going to be able to run their cars. I think maybe carpooling will come back into vogue and other things, but it's not going to be fun. It's not going to be fun for people. I can guarantee you that. All right, Netflix is helping. Amazon buys them out. Well, I think Amazon's a potential short too. I'm getting ready possibly to short Amazon. I've got as I say, I've got a very put spread on Netflix, but Amazon. See, part of the problem with the business that they're in, this is going to happen with so many of the tech stocks, like Teladoc, like Netflix. They all had the first mover advantage, but now the problem with most of tech is that there just aren't any barriers to entry. Once you get the idea, you can do stuff to them. So here's what I'm seeing in Amazon stock. Now, I would not have, about 2 months ago, I would not have believed that Amazon would be a good short, but I'm getting an impression that it possibly is. And here's why. Let me show you this. I'm going to go to the weekly chart here. You'll notice that It's dropped, and now it's not getting support. I think it can easily come down because of the weakening market. I think this could come down very easily to a significant. Now, here's one of the reasons why I think this is possible. If you look at Amazon, it has a price to earnings ratio of basically 53. Okay, now before this didn't matter too much, but now this stock is overvalued based on its price to earnings ratio. Why? Because you can go to another stock, for instance, let's go to Google in the same industry, essentially same industry, and you'll notice, let's just pull this one up. You'll notice here that that Alphabet or Google has a price to earnings ratio of 22. Notice that. Now, under normal circumstances, that wouldn't be as big a deal, but it is a huge deal right now. And why? Because why would you want to own Amazon if you could own Google with a 22 price to earnings ratio? I tell you what, I wouldn't. And that's what a lot of people are going to do. They're going to be trading in their Amazon shares probably for Netflix, they're going to be trading in their Amazon shares for Google shares. Why? Because if you're going to be in the tech space, why not have a tech company that has a 22 price to earnings ratio? So what I'm saying is that Alphabet's price, theoretically, if you base it on PE, which you really can't do, but based on PE, the true value for Amazon needs to be about $1,020 a share. It's currently $22.84. I think it's probably going to go lower, and I'm going to hopefully try to help people, benefit from that. But I think that we could see 50% reduction in the price of Amazon in 6 months potentially, if we get this what they call earnings compression. And I don't know, if that's earnings compression. So that's what I think. Amazon, absolutely. So the stocks get low, get lower, and as well, all my stocks fail. Well, see, here's the thing we got to do. This is one of the reasons why, if you're down more than 7% on any of your stocks, you really need to consider selling now and then waiting possibly to go long once we've seen a bottom. Now, we may not see a bottom for a while. I don't know. We may see one tomorrow. We may see a follow-through day tomorrow. But right now, I think you just got to protect your capital. Right now, the best place to be is in cash or short. And I'm trying to do both. So that's a very good observation. Thank you for that very much. All right. Will oil go up with the CPI? Will the consumer price is high tomorrow? Actually, oil. What's controlling the price of oil is it's a supply problem with oil. Do you know that we have plenty of oil, and we could, if we were willing to extract it, we wouldn't be in part of this problem. Remember that in the last year, the first thing that Biden did, and again, I'm not trying to criticize him, but the first thing that Biden did in his administration was cut off the XL pipeline. And that took about 15% of the crude oil supply off the market immediately from Canada. They could have been selling it to us. So what are we doing now? Well, we're not doing anything. We're importing more oil, but we're not doing anything. So we have a supply problem. Well, we could be drilling in Alaska, but of course that's off limits too. So once these things get started, they're really hard to let out of it's sort of like when the Jack in the Box comes out of the box, and very hard to put it back. So I do expect that we're going to have, probably for a while, we're probably going to have high oil prices, and that's just a fact. And it's a needless, it was an unforced error, but we're getting a lot of those these days. I hope we don't get into a war, but anyways, whatever. Okay, Tesla buy point. I wouldn't be looking to buy Tesla right now, even though it is holding up very, very well. This just isn't a market to be long. I want to show you something. I want to show you something, Omar, that I think that you really should look at, and it's the Ark Funds, ARKK. Ark Invest was the big deal last year. I mean, Kathy Woods, she's sort of a legend. I mean, as they say. But here's the problem with that. If we're looking at the Ark Funds, and by the way, the Ark holds an awful lot of Tesla. Tesla's a great company, but look at this. Look at this. Since basically 2022, this has lost. It's currently selling at $39 this year. This has lost almost 2/3 of its value since when it was up here at 160 back here in 2000. See this? See how this is lost? And the largest holding of Ark, ARKK, is Tesla. So I just don't think right now is a good time to be buying Tesla. I think it's time to wait. Now it's a good time to be in cash and possibly wait. Let's see if we can take a question from, are we in the recession? Yeah, I think we are in the recession, and by the way, sometimes these last a long time. I can vividly remember from 1980 to 1982, and I know you think, geez, Grandpa, to get off the stand here, but it was really bad. I mean, we had high inflation. It was very, very hard to get a job. I actually delayed. It was interesting. I was in college at the time, and I delayed graduating. I should have graduated in 1981, but I delayed graduating. I slowed it down because I was afraid of graduating into a recession, and I did. I graduated into a recession, and I was very lucky. I was able to get a job, but about 60% of the people in my class were not able to get a job 6 months after graduation. So not a good thing. Not a good thing. So I think that we could see this go for a year or more. It just depends. Interest rates are going to go up, and that's going to determine a lot of things. And the reason the interest rates have to go up is because if we don't, the inflation will just rage out of control. We're going to be paying for the COVID lockdown. We're going to pay for it. We're going to pay for it hard. And of course, we're sending money to. We sent $33 billion to Ukraine, which really would have been great for people here in the United States, but whatever. So that's going to contribute to it because we don't have that money. So it's going to be difficult. I mean, it's going to be it's going to be difficult. Anyways, I don't want to be doom gloom. Okay, at Jay, it's already Sky, probably with war in our current regime. Well, look. I mean, I just hope we don't get into a war because that sort of usually is the end. That's usually the end piece in these things, as we do get into a war. I just hope we don't. We just sent $33 billion off to Ukraine, which, I don't know. That's just amazing to me. It's a European problem that we're trying to fix, and I just don't. I think the Europeans need to, it's their continent, not ours, and they need to do their own work. Anyways. All right, so let's take a look at gold, GLD, and of course, this is the ETF that tracks gold. I'm not that bearish on gold right now, and it sounds strange that I wouldn't be, because Jim, it's an inflation hedge. Well, actually, and this is the weirdest thing of all. I think right now the most important thing is cash. I think cash has actually outperformed everything but real estate this last quarter. So here's the thing about gold shares. You notice how they're pulling down in this consolidation range. It's making a weak attempt. I mean, look at this relative strength. I mean, it's way up here at 86, but yet it's moving down. So I'm not totally convinced that this is the thing. This is the place to be. I'm not going to say it's going to drop out of the sky, but I don't think it's looking very good. LNG is another one that I do like. I do like LNG. I would stop out of this one. This one does have the right. If you look at it, this is the right kind of chart. The chart that you want right here, going from low to high. You want that. Definitely that kind of chart. But I do think that this one. You could definitely buy this one. Here's the problem. It's going to be a little bit hard to hold on to this one. and we're not at an ideal buy point on this one. We dripped below that 40-day line. You can see I was stopped out there. I still really like LNG because I think that they're in a commodity that is short worldwide. I think that in inflationary times, and I'm old enough to remember them. In inflationary times, commodities do very, very well. And Cheniere is in the commodities business. They're in the LNG business. So I think that, I think it's a good stock. I do. I do, Dan. I think it's a good stock. And I think, I definitely think it's good. I think you can go long on it. All right. Where do you see crypto? I don't know about Luna. Here's the thing I think you're going to have to deal with. This is tough. A lot of the crypto is going to be moving lower. Okay. At least for the near-term future. If Bitcoin moves below 3,100, and it's very likely to, and the reason is, part of the reason I think it is not because it's not a store of value, it's because people that have crypto now need cash to pay their things. So actually cash is more valuable, at least in the short term right now, than their crypto. So they're selling their crypto, that's pushing it lower. And I think if it moves below, actually 3,200 is the 32,000 is sort of the floor. So if it moves below that, we're probably going to see it lower. It may be a buy here in a few months. I mean, we may see it go down as low as 17, and if it was, then we possibly should look at buying it. But I don't really like being long crypto right now because I don't see it being that strong. Ark W has done fantastic last year. Yes, last year is the key. How things change. I mean, how things change. Yeah, it hasn't done well this year, unfortunately. The only thing that looks good is SARK, and I wouldn't buy SARK either. Actually, I think the SQQQ that may be looking somewhat good, but yeah, anything long is just not working right now. Definite dead cat bounce. I agree with you, Ty. That's kind of why I was putting it out there. I think this is a dead cat bounce. I think this is going to give us some opportunities to do some shorts, and I think that's where we're going to probably do the best is going to be in that kind of thing. I think this is the markets are moving higher, but I think this is a dead cat bounce. I really do. I believe it's a dead cat bounce. We were right. Unfortunately, you're right. Yeah, there you go. I agree with you. DXY. Let's look at DXY here. See what's happening there with. Oops, it's not letting me see it. DXY. Oxy, maybe. Yeah, I can't. Okay, XLE. I was stopped out of the XLE. Let's see if I can. For some reason I can't get this chart. XLE. Let's see if I can get the XLE chart. Boy, sometimes during this time of day, my system really slows down. Okay, it did. Yeah, it's down after hours. Yeah, oil's down a little bit. So. I think there's going to be a shakeout. Let's look at Chevron. This is the last of the oils that I have, and it seems to be holding up. It's it's a large refiner. Yeah, there's Chevron. This one seems to be holding up. It seems like it got some support at the. It seems like it's got some support at the 50-day line here, and so that's looking good. But it's awful after hours. So this is a tough rally, man. This just, I think we're going to go lower. And so I think it's time to just brace and, try to just move into cash. Zim, let's look at Zim. And this one was doing great. In the first few months of the year, boy, I tell you, this was a great one. I definitely was in it. I got, and you can see it by my chart. I got in here and I got out there, but I haven't been in it since. This one just, it's getting some support, but like everything else, I think we're going to get a worldwide slowdown in the economy, and even the shippers are going to have trouble. As a matter of fact, because the economy is going to shrink probably next quarter. Um, we're probably going to see things like railroads go down because they can't man the railroads properly. Can you believe that? Also, the truckers, they're paying over $5 a gallon for diesel, which is going to make everything more expensive. So it's just, yeah, it's not very fun. I mean, it's not very fun. I wish I had better news for you. I really do. Um, I really do. CVX. Okay, well, CVX, of course, is Chevron. Let's look at that chart again. CVX. That one seems to be holding up. It's one. It's the only stock that I have right now long, and that's amazing. Because usually I have more. I have more than this, but right now that's it. That's the only stock that I have long. It's looking pretty good. I mean, 97 relative strength. I mean, it's in the top 3%. And it's in the right sector. It's in the oil and gas integrated, 6 out of 197. So it's a pretty strong sector, but in this kind of market, even a strong sector in this kind of market just doesn't it just doesn't do it. So what I'm recommending and kind of what I'm doing myself is I'm looking to short and basically be in cash. All right. Can we even call today? Right, that's true. You might not have even had a dead cat bounce. I kind of agree with you there. Dollar store, U.S. dollar. Okay, that's the U.S. dollar chart. Yeah, actually, yeah. Let's see if it'll show me that. Okay, let's see 0 DXY. I can't remember all the time the that's the dollar chart. I know, yeah. Yeah. And actually, the dollar is doing better against some of the major currencies. I can't get that chart, unfortunately, up. I've got to find a better way to do that. But when I was looking earlier this morning, the dollar was appreciating against other currencies. So actually, a good strategy, and I could actually think about this, is to rent everything in the U.S. and go to another country like Argentina for a while. You'll be living like a king on the U.S. dollar. All right. All right. Kramer just tweeted, great place to be in Bitcoin. No. If Traver, here's the thing, you got to understand about Kramer. He may be a really great guy in real life, and I'm sure he is. But here's the thing, he's a tout for everybody else. There's a lot of people trapped in Bitcoin right now. And they're trying to get all of us little retail investors, all of us little minions to buy that Bitcoin so that they can sell. Don't believe it. What you want now is cash. Seriously. All right. When do you see Bitcoin bottom? Don't know. But I think it's going to be probably probably 2 or 3 quarters, I think. But it will bottom, and there will be opportunities. And remember, right now everybody wants to buy Bitcoin, so you don't want to buy Bitcoin. It's sort of like it's just like Rothschild said, 300 years ago? Wait until there's blood in the streets. Get into cash. Wait until there's blood in the streets, and then Bitcoin is going to be a great buy, because it's going to be a great buy, but not at 31,000. Not at 31,000. All right. At least one Jim's. Thank you. I'm not trying to rag on. Thank you for saying that. I'm not ragging on Jim Cramer. He's made a fortune, and he has a great show, and everything. But don't buy the hype, because what they're trying to do is there's a lot of people that are trapped in Bitcoin. There's a lot of people that are trapped in Bitcoin, and they don't have a way out. So be careful out there. I'll be back tomorrow at 5 o'clock. Thank you so much. Hopefully this little experiment worked on. Wow, that's pretty good. Hopefully this little experiment worked by showing the picture of the of my monitor. But if you're looking on TikTok and you want to get on the action trailer, it's super easy to just go to the my profile, click on that link, and that takes you right to the site. All right, let's see. On fundamental analysis. Let's do fundamental analysis on you. That's Unity software, of course. And let's go. I'm going to pull over to Unity software really quick here. This is Unity. As you can see, it's kind of not doing the right thing in terms of the way it's going. It's moving downwards. Now, to do fundamental analysis, we're going to click over to the weekly chart, and that's going to show us sort of what's happening here. Now, in terms of fundamental analysis, it's doing okay. I mean, look at these. Sales are going up very nicely. Look at that. Very good. But this is the problem in this market that is punishing growth stocks. We're losing money. You see that? So the cash flow is a negative 10 cents. So basically, this is a growth company and hoping that it's going to turn the corner. In this kind of environment, in a recession where we have all this inflation, this is not the stock you want to own. You want to own a stock like Chevron. If you want to own stock at all, you want to own a stock like Chevron or Shell or something like that that's just basically pumping money out the door. Okay, let's compare this Unity to CVX, the only stock I own right now. I'm not recommending it, but I'm just saying this is what the market is saying right now. CVX has a cash flow of 17.53. So it has a price to earnings ratio of 15. So the return on the equity in this stock, cash on cash, is 12%. Now, you can't get 12% anywhere in the market, all right? But you can in Chevron. Why? Because the price of oil is through the friggin' roof. That's why. And they're pirates, and we all know that. But, right now, that's what's being rewarded in the market. It's very hard to do, but try to kind of look away a little bit from some of your enterprise and your gaming shares right now because they're not working. They're just not working. Yeah. Okay. I mean the stock market, not Bitcoin. Well, we're definitely in a let's see. I mean, stock market, not what's the fundamental? What do you think it's going to be? I think it's going to be lower in 6 months. I really do. I think it's going to be significantly lower. Let's take a look at the spider, because this is going to tell us, kind of give us the tail. And I'm just looking at the monthly chart, the weekly chart of the spider. But as you can see, we're starting to kind of pull over here, and this is not good. I think we can easily move down to, I think in 6 months we could easily be at 350. So we could drop here, we could drop easily 50, 60 points. And I think that's what's trending right now. Right now, the overall trend in the market, and remember, the spider is the ETF that is for the S&P 500. It is starting to show that it is starting to make its movement kind of over with, and it looks like it is going to move down. So what we're seeing here is that this was the drop. This here represents the drop, the big COVID drop. All right. And I was actually shorting the market at this time. I was actually shorting the spider and the QQQ. We're starting to see that. It's going to come probably from here, I think at least as far as this. So I think it could at least come all the way down here. I think we're likely to give back everything that we've gained since March of 2000. That's my guess. So I see it coming to this about 340 levels. So I see it coming down and giving back all of this gain. So that's kind of what I see. And that's not a very popular thing to say, but I think I do believe it. Microsoft can hit 250. Well, let's see of Microsoft. Remember, I was trading Microsoft back in 2000, and then I didn't trade it for another 17 years until 2017. And that's when it moved above where it was in 2000. So stocks, even really great stocks, can stay down for a very, very long time. Let's look at Microsoft. I think it could easily hit 250, and I think it's likely to, actually. I think it's likely to because it's lost support at the 50-day line. So I think it's very likely to move down to 250. Would I be shorting it here? Probably not, because they're solid. I would look to possibly something like Amazon or something like that. But yeah, I think it definitely can go down to 250. But I wanted to buy Google at 2,200. It's now there. And I don't want to touch it. I'm sorry. Yeah. Yeah. Sometimes you yeah. Sometimes it happens how that is. I think you're right. Be careful on Google. But I do think, by the way, that Google, out of the tech stocks, it's really the one that's held up. Even though it's pulled back a lot, I still think it's a great stock in a lot of ways, based on its fundamentals. I mean, it just has a 22 PE ratio is excellent, but yeah, you don't want to buy it here because it could easily move to 2,000. It could easily move to 2,000, unfortunately. So we just got to be careful. Tomorrow is CPI data. Good luck, everyone. Make sure it's 11. Hey, thank you, man. Thank you for saying that, George. I so appreciate it. I just want to thank you for saying I'm trying to get out there to a lot more people. You're helping me. I so appreciate it, everybody. And happy trading out there. And let's get that like button up there. Thanks. And I will see you tomorrow, everybody. At 5, hopefully. So just keep sell your losers, go to cash, and get ready to short because we can make some money in this market, but be very careful.